I mean, interesting. I've spoken a lot to all of the big Web2 platform teams, right? And there's a lot of really good Web3 people who are really pushing hard to change it. And I think they get it. I've not heard from a single person from Apple. And I've spoken to all the others at length. Not one person from Apple has come into my ecosystem to say, hey, we're looking at this, which is, it's interesting because Facebook learned that even they don't own their own ability to thrive and survive. Apple had them by the throat. They didn't even realize it. The App Store's so powerful. To thrive and survive, Apple had them by the throat. They didn't even realize it. The App Store's so powerful.
Elon, Epic, all of it. Yeah. And I think it's a very exciting place for companies like Apple and others to go. But I think the way that they go there, who knows how it's going to be, right? Like if your mode of building is to walled garden everything, even if you're very benevolent, like you're not going to want the anarchy of innovation and evolution that the way that Web3 brings it forward.
Mike, I want to ask you a question because we all focus on the negative and all these collapses and the things that could happen moving forward. But there's also been a lot of good news this year, right? Specifically from Wall Street and the institutional side. I mean, Fidelity and BlackRock. I mean, the biggest asset managers in the world are making access to this asset class easier than ever before. And with all of these collapses that are already happening and the ones that potentially will follow, there's going to be a lot of opportunity for distressed assets, right? I mean, miners, obviously, with hash rate being exceptionally high and miners looking to declare bankruptcy potentially or become insolvent. So the question is, now that we're seeing all of these institutions flooding into the space and offering these services, and we're seeing somewhat of a collapse of the industry, do you think that Wall Street or these companies are going to end up controlling the bulk of this industry? I mean, I've seen rumors that Point72 is raising over $1 billion to buy distressed crypto assets. Is this the way that Wall Street finally sort of comes in and sweeps up the trash?
I don't know. Look, Vanguard they're like one of the biggest shareholders of most American companies, and that's just the nature of indexing. If you put all your money into Vanguard, over time they're going to own. BlackRock and Vanguard together are going to own some big percentage of the equity markets. Is that necessarily nefarious? I don't know, right? But I do agree that we're coming to a good part of the cycle for long-term value investors, right? So I've been watching the Bitcoin miners very closely. Obviously, I'm on the board of one of the publicly traded ones, Iris Energy, and we just recently, in a sense, cleared a big chunk of our debt because the debt was in SPVs. Those SPVs only held ASIC machines. When we decided that we couldn't afford to pay for those anymore, we're essentially just giving them back to the lender. And so we're clearing the deck and we're setting the stage for the next part of the bull cycle where we'll be able to replace those machines in facilities that are still wholly owned by us. Core Scientific yesterday, if you look at their bank, B. Riley, we also have a facility with B. Riley, by the way, but B. Riley, it's very atypical to see an investment bank come out and write a letter to shareholders. But that's exactly what B. Riley did. They wrote a letter to shareholders of Core Scientific and suggested that, in fact, Core Scientific is a great business and that they just need enough capital to get through the bottom of this bear market. And I agree with that. I think there's a bunch of really high-quality assets right now that are trading in plain sight. They're trading at bankruptcy-type levels where they're trading at a level where the market seems to think that they're going to zero. And it's very clear to me that some of them aren't going to zero. And these are potentially generational opportunities for investors. So while I am
change, and none of the people, including the investor base, everybody from the hedge funds to the institutions, to the family offices, to the pension funds, they're all still doing the work. They're all still set up. They're all sheep now, right? Right now, it kind of is the wrong moment unless you're brave. So the brave people will do it now. But really, once price turns up, they're all pile in, and that whatever it was at peak at the last bull market, 3 trillion, will be minuscule compared to the peak at the next because of the sheer amount of capital that comes into this space. Talking about Bitcoin miners, I've been speaking to some of the biggest Middle Eastern economies. I mean, they get this. They're building, thinking about the gas flare-offs and what they can do with mining Bitcoin. They're thinking how they can hold it as part of their sovereign wealth fund in a much more meaningful way. It's all coming. People are just very impatient. They expect it to come tomorrow. And, we've got to go through this despair, loathing phase that, Scott, you're going through, as I can tell.
I feel great.
before
my game.
before you go back to the optimism phase and we can forget all about this and start counting every 1,000 as it goes up and putting laser eyes on the screen again.
I think
Just don't forget, Scott, is every time you're bringing on, by the next bull run, just by the magnitude of the adoption curve, right? You've got another 600 million people to come. You've got to educate them all over again. And humans being humans will make the same mistake every cycle. I've been in this since 2013. Yeah. Every time an exchange goes bust at the bottom of the cycle, and everyone learns the same lesson all over again because they're all new participants. Again, I've kind of lived through this a lot, whether it's in crypto and traditional markets. I was heavily involved when long-term capital management, the giant hedge fund, went under. That brought down about 20 hedge funds at the time. And it was so catastrophic that the Federal Reserve had to bail out the banking system. The outcome then was anger, despair, hatred, hedge funds, leverage, opaque vehicles. Nobody should be allowed to invest. How dare you put your pensioners' money into it? What happened was actually regulation and the size of assets in hedge funds tripled in 4 years. Then Bernie Madoff came. It's a scam. It's a Ponzi. It's all opaque. It's a terrible business. Nobody should put their pensioners' money into it. What happened? Regulation. It 5x'd after that in size to $3 trillion. So actually, the regulation is a good thing. I know a lot of people in this space don't like regulation, but you can't have it both ways. You cannot want to exist on-ramping and off-ramping from a fiat world and not have regulation. It's as simple as that. And so when that comes, which it will, it's just a matter of who wins the fight between the CEC and the CFTC. There will be an answer, and that will give everybody comfort in the space to get in. So I don't think it changes the adoption curve. It's no different than Mt. Gox going, which was actually bigger because it was a bigger part of the market. It would be like the equivalent of FTX and Binance going under at the same time. Now, that may be happening if Mike's right.
And maybe Coinbase. Maybe Coinbase,
right? It was everything. Right? I was lucky. I was with Itbit, which Chad Cascarilla, who founded Paxos, had started. And I was out of the whole thing, luckily. But, we saw it with Bitfinex as well. They were huge when they went, insolvent. So we've seen it a number of times before. It doesn't stop the space. It's usually just when the tide goes out, and that's usually when monetary liquidity is withdrawing from the system, you see who's swimming naked. And it's always, listen, it's a really simple thing, Scott. You do not ever build a business of leverage on an asset or of a collateral that is 100% volatility. That's fucking insanity, because it will, probabilistically speaking, force you into insolvency, guaranteed. Now, that's why real estate has leverage, because it's very non-volatile. It's maybe a 0.5% volatility asset or a 1% volatility asset. This is 100 times more volatile. And idiots think every time, you know what we need to do is build leverage on a 100 volatile asset and then wonder why they blow up and go, really, guys? It's pretty obvious. So anyway, that's my learnings, that regulation will stop the leverage in certain ways, or reduce the leverage for in line with the underlying volatility, and sort out properly client segregation of funds. I mean, I was also caught up at MF Global, which was at the time was massive as a futures brokerage. It was bloody John Corzine, my old boss from Goldman Sachs, who was the governor of New Jersey. He stole the customer money to take bets on European government bonds. And he was a fully regulated futures brokerage. I mean, humans do this stuff. Give them a cent of money anywhere, and they will abuse it.